Good morning and welcome to Financial Friday, your end of week financial update from your credit union.
I'm Crystal Parker, Financial Education and Community Outreach Ambassador, and I'm joined by Paul Cantor of Members Mortgage Solutions, and we're talking about understanding the role of the loan officer in the home buying process.
Good morning, Paul. Thank you so much for joining us today.
Thank you, Crystal. It's good seeing you too. Hopefully your summer's going well. It's just hard to believe we are almost at July. We are really at July 4th weekend, right? That's Sunday.
It's unbelievable.
Yep. Yep.
So this week, as I said, we're talking about understanding the loan process. What does a loan officer do? So Paul, you're a loan officer. I've known you for quite some time, and I think I have some ideas about what you do, but tell me a little bit more.
So you want to know what I do for a living, what I do on the daily basis, right?
Yes.
And why somebody probably is going to benefit from having an actual physical person that they can touch or virtually touch during the pandemic, as opposed to just kind of going online. And it's kind of a foreign thing, getting a mortgage. Am I doing it to refinance because rates are low, don't know what to do, or do I want to buy a house, and do I start there? Do I start with the realtor? So, what's my role? And inevitably, people don't know how to start that conversation. So this is what I get is, what's your rate? Can you give me a rate? Well, let's kind of step back and say, okay, what are you really asking here? Is I want a mortgage. So, my role is to kind of delve into that question with the member and see, okay, is our goal to stop renting and to build some wealth and buy a house? Am I looking for investment property? Do I need to kind of look at my debt load and maybe use that largest asset I have to save money or build wealth so I can retire when I want? How to do that? So my role as a loan officer or another loan officer is part of that financial puzzle. We're not financial planners, and you've got Ken and Dennis for that, and great guys, but it's definitely your debt's a big part of that. So people don't really think about it. So, part of my role is to figure out what the member really is looking to do. And is that to help cash flow? I know we did one of these, I think I was in the lobby of a hotel talking about reasons why you may not want to pay your loan off fast, right? But for some folks, there's a non-financial, almost non-tangible thing to having that mortgage paid off. And if that's the case, we want to, do what the member is the client. They are the one that we want to serve, but we first got to figure out what they want, not just kind of throw them in that low rate. Oftentimes, the lowest rate mortgage is going to end up costing more money over time for the member. So we need to do that. Once we kind of establish, and sometimes we a lot of times don't really know what our goals are. So if we've got a member, looking to refinance, they may have called in because their buddies are doing it, or they heard on the media that rates are low. It's a good time to do, which it is, by the way. And equity is growing, but don't really know how to take advantage of it. And it's not uncommon for us to say, don't do anything. And that's okay. We're maybe not getting business there, but I think the member appreciates that and appreciates the credit union for providing that advice. But kind of look at the whole picture. The other thing is, I want to buy a house. And do you think it's hard to find a house right now, Crystal?
It's unbelievable. Unbelievable.
Right.
I have so many friends that were thinking about it or have been trying to buy a house, and even some family members, and hearing their experience. I'm grateful I have a house right now.
Well, let's delve in. So let's take so one of my roles is, hey, I want to buy a house, but I don't want to be homeless. So how do we get somebody to qualify to buy that house before their house goes on the market because it's going to sell? And heard a great description the other day. The housing market's gone from blistering to sizzling. So it's still very hot, but don't give up. A lot of the folks that we're working with who've been working with for months, their expectations are proper. The realtors and hopefully the loan officers setting those expectations, the current market properly, and they are finding houses. So rates are low. I don't see, and most of the experts, in fact, every economist I spoke to, they don't see where house prices are going to, pop and burst. Now, did have some people overpaid? Probably, but over time they'll be fine. But the basic demographics there, and again, that's a whole nother conversation. But let's kind of go back as we can provide some steps on how somebody can purchase a house before they sell theirs. And it could be as simple as borrowing more money and then re-amortizing or recasting the loan. Or it could be that we have a temporary use of funds out there. Maybe we're borrowing against an investment account or a retirement account to gap that 2 or 3 months. We're doing a first and second mortgage on the purchase and paying off the second lien. So that's one case where somebody could do that. But, the market today is definitely different than it was, 4 or 5 years ago. And we could ask the sellers, we're saying, yes, I'll take your offer at 1 or 2% below asking price, and I might throw a few $1,000s into closing. Now it is, I'm not even going to entertain an offer unless it's 1 to 2 or more % over the asking price. And by the way, you want to pay my closing costs? So having that expectation, the call with the loan officer. So if somebody's even, thinking of buying a house, whether it's a move up, investment property, first time buyer, or somebody who, unfortunately see some divorces and through, they've kind of grown a lot during these pandemic times where people are at home. Thank goodness you and I both have good marriages and like our spouses, right? And I am trying to get bonus points with Debbie. And so spending time together is good, but we've seen some situations where they've broken up. And so part of that separation is, how do we deal with this large asset? And we both need a roof over our heads. So how do we manage that? So that's something we do, and just talk about the market and the expectations for selling it. And then once we've kind of determined the goal for the member, whether it's to buy a house or to refinance, to consolidate debt, or just to save interest costs or make investments, let's assess that member's financial situation, see if it's doable. And it may be doable, but uncomfortably doable. And what I mean by that is, yeah, you can qualify for an $800,000 house, but you don't like the payment. You feel like cash flow is stretched. Or if we've got a first-time buyer who is not paying rent because they're living with mom and dad and they haven't been able to save money, let's have a conversation about budgeting. How are you going to be able to have a housing payments if you haven't been able to save money for down payment? If you've had no, now there could be good reasons for that, and maybe we're setting a plan, and let's go through your expenses, and the have tos is great, but the want tos, the things I want, maybe we can cut those by 20% a month. And put that money into savings. And then once you kind of get used to that, you've got some down payment funds. I have a member I'm working with now who had started the process, I believe 3 years ago, to buy a house, or 4 years ago. Didn't have much money, did not come to the credit union, had a bad mortgage experience, but realized, hey, I'm going to stop renting. I'm going to stack away money. Has saved 6 figures for down payment where he had very little before, and is now out looking for a house, and comfortably so. And these are the kind of things. So it's not always a short-term game. So once we kind of figure out what our goals are they obtainable? What steps do we need to take to attain them? Understand the marketplace. Then we can set them out to buy a house or start the refinance process. And then we've got to explain, people think it's like buying a car, and we can take this analogy so many ways. I can walk in the dealership, I can sign a piece of paper and drive away with that car. And the mortgage is not quite as fast of a process. Okay, and a lot more paper. And someone may say, well, your house is going up in value. The car drops in value when they drive it off the lot. And didn't need to put any money down payment or anything. So we've got these regulatory hurdles. Now we're lending money typically for a much longer period of time. So we make sure that asset's there. And also, a car's not a necessity. I mean, some people may feel it as a necessity and it may be needed for job, but a roof overhead is sort of like food. You need that protection. So repossessing a car is a lot shorter, easier process than it would be to foreclose. That's not that we want to do either, because we are not in the business of foreclosing, and don't want to do that. So we want to make sure it's sound. And yes, there's been some bad actors in our industry, and hopefully they've been weeded out over time. And so some of us are paying the price regulatory wise for that. But overall, it's a little bit lengthy process. We want to go through the steps, explain what title insurance is, prepaid items. It's not just your down payment when you purchase a house. So keeping communication lines open with the different parties, being the settlement agent, which would be the closing company, your homeowner's insurance agent, your realtor, if realtors are involved. There's a home inspection, title search, all these bits and pieces. The lender's kind of coordinating that along the way. So, just kind of, does your lender reach out? So how do you choose a lender, right? Is it, hey, what's your rate? The price plays into it, but it's not everything. Are we the absolute cheapest? Some days we may be, some days we're not. We're going to be very competitive on rates, but that advice, you're going to save more money getting in the right loan product, borrowing the right amount of money, than just getting the cheapest rate out there. And that will prove itself time and time again. So and then after we
it sounds like it's not just a matter of processing a loan. This is really when working with a loan officer and you're going through this home buying process, this is about so much more. It is a relationship. Now, will confess, I have worked with you not once, but twice when it comes to the lending process. And selfishly, I thought it was so relational because it was me and I've had a long time relationship with you and your family. But it turns out it's really not that. You're really here to help our members in the community with navigating that process to make sure that they're getting the best possible loan, right?
The best loan for their needs, and that they understand why, the logic as to why we're going there. And we keep in touch after the fact too. It's always good to hear from our borrowers and check in with them on a regular basis, just to see how things are going. And sometimes more often than not, those are we call it at certain intervals. And more often than not, everything's good. But sometimes there's life changes that nobody predicted, and it could be interest rates are low like they are now, and we end up doing something. Whether we're pulling some equity out for home improvements seem to be really big right now, I guess, because people are spending time at home, and the credit union's got some great home equity products that can help fund those things. So yes, there is a reason why I get paid.
It's so important what you're doing, and I really appreciate you explaining more about this process. I think for someone who has never bought a home before, or really had someone else perhaps holding their hand through this process and they're trying to navigate it on their own, it's so good to know that there are folks like you out there to really help them through this process.
Well, thank you. Have a great holiday weekend.
Thank you. Thank you for joining us today.
We hope you've enjoyed this week's edition of Financial Friday. Have a great week, everyone.